Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets fall for the second day in a row. The Nifty fights to hold the 12,000 mark, while the all sectoral indices trade with cuts. Autos and metal stocks are the top laggards. Mahindra & Mahindra, along with Tata Steel, are the top laggards on the Nifty after their third quarter numbers. UPL is the top gainer among the 8 stocks gaining on Nifty. The management has maintained its sales and EBITDA guidance for FY20. And inflows into equity mutual funds are at their highest level in 5 months for January. This according to data from the Association of Mutual Funds in India. Good afternoon, Neeraj. Well, weakness continues for the second straight day. I think important to see whether we can close above the mark of 12,000 today.
Yeah, or this doesn't become too aggravated. But this is seeming more like what happened in Friday's session, just a little bit more worse for the Nifty, because the Nifty is down about 0.78%. But if you look at the Bank Nifty, the Sensex largely in line with the kind of cuts that we had even in Friday's trade. No alarm bells. The rest of the world isn't doing it that great. Should pull up Dow futures. They had a bit of a pullback in Friday's trade, and let's see Dow futures or the European markets how they are doing right now. Dow futures marginally, but a flattish move really right now, and the European markets too marginally off. So no surprise that we're doing what we are doing. The market breadth very quickly on your screen before I get to what individual stocks are doing. Actually, let's look at the Nifty breadth. That's okay. Let's look at the Nifty breadth first and then look at the other things. So first, the set of losers, and you can see that while we had only the metal names being down a couple of percentage points at the start of the trading day, now a lot of other losers have crept in. So Z's down another 6.5%. M&M post results. Eicher Motors continues its slide lower, so down another 4%. There's weakness in Tata Motors. So almost all globally linked auto names or companies with bad results are not doing all that great. There is weakness in Britannia. The numbers didn't seem way off, just about meandering in line with estimates, but down about 3%. Weakness in NTPC, weakness in Grasim, weakness in Yes Bank. So a lot of stocks have issues. What is doing well is UPL, TCS and HDFC. Lastly, ICICI Bank and Bajaj Finance. So stable financials seem to be doing okay. But just before I give it to Devina, should pull up the intraday of Yes Bank for our viewers. And you will see why I'm saying that, because the stock started off about 4 or 5% higher. Lots of rumors doing the stock. At any point of time, it can have multiple rumors going through it, which may attract people or dissuade from it. But look at this, started off higher and currently about a couple of percentage points lower. Devina, but that seems to be the trend for the market as well. Didn't start as badly. Right now, almost at the lowest point of the day, more so for the broader end of the spectrum.
Yeah, and more so for, we've got the small cap, which was outperforming. It was the last a few hours of trade, that too has given way. And that's what you've got in terms of the advanced decline market breadth, which is 1:2 in favor of the decline. So the pain points continue from Friday's session. I guess in the last 1 week, last 4 days of last week was the kind of excitement and the risk on trade that came back in is now sort of seeing some amount of profit taking. Today's session, while we do have the index down 1%, there are a few movers in trade as well. Starting off with stocks like Pfizer, which is up about 4.7%. Alchem Labs is up. Natco Pharma. It is the mid-cap pharma pocket, which is pretty resilient even in this sell-off. So watch out for all of those names. Dalmia Bharat for one, that's up about 1.69. Nippon Life India Asset Management is up 2.5%. Remember, we spoke about this stock in Bloomberg Edge in the morning as well. And HEG Graphite, a Friday session too saw big moves. And in today's trade, the stocks are managing to stay afloat in a falling market. Other than that, you've got declines coming in for Whirlpool on the back of disappointing results. Sale is also down. Talks of some stake sale there. And you've got Voltas, which is down another 4.5%. Prestige Estates also continues to see profit taking. From the small cap space, just pulling up that index as well. Gujarat Narmada Valley Fertilizers, GN, that's up about 9.5%. Godfrey Phillips, that's up about 5.8%. Walkhart continues to do well. Bajaj Electricals is up 3%, and then you've got the likes of India up 2%. Losing out is Care Ratings, that's down 7.5%. Metropolis, after a good set of numbers, the management pretty confident about the next few quarters, is down 4.5%. This is profit taking post its results. Just Dial is down about 4.5% as well, along with Equitas, which is down 3.5%. I just want to also look at Bharat Forge, which reported its numbers, and I think post its numbers and the stock and the movement in that, it's down about 4.5%. This this is the time where you saw the numbers coming out and that big cut came in. From there, it's recovered a bit, but still down about 4%. What else is happening in the more liquid universe in the F&O space? Namrita is joining us to highlight that for us. Namrita.
Thanks for that, Davina. Good afternoon. While if you look at the activity in the futures and options market, Nifty very briefly, by the way, today breached that mark of 12,000, but right now we're above that mark. Remember, the futures continue to trade at a discount for the 8th straight session now. Open interest build up of about nearly 6 to 7%. If we breach the 12,000 mark and if we trade below that mark, remember then the 100 DMA once again comes into focus, which is somewhere about 11,870 or 880 thereabouts. Nifty Bank, which is also down over 100 points in trade, is seeing some bit of build up in position, at least on the future side, as open interest is up about 7%. With weakness that we've seen across the board today, you've seen the volatility index inching higher, which is at 14.3, still not at elevated levels, but it's gone up about 3.5%. Options data, what levels to watch out then? You're seeing call riding at levels of 12,050, which is added 11 lakh shares. Even the 12,100 strike has seen aggressive riding coming by. Nearly 19 lakh shares so far has been added. Like one silver lining in today's data would be 12,000 put has still not seen any sort of unwinding. We breached that mark, but still there is fresh writing which is coming around that mark. Remember, bulls will look to defend the 12,000 mark, and we are seeing more addition coming on the 12,000 put strike. Range remains the same, 12,000 to 12,200, but if 12,000 gets breached, 100 DMA becomes will be in focus, which is at about 11,880. Madison Sumi, in terms of stock futures, the numbers came out a while back. It's trading below its 100-day moving average, and post the numbers, we have seen the stock falling on high volumes as well, and the futures are indicating fresh short positions. There you go. When the volume spiked, and that was the time the numbers also came out, that the white line is suggesting today's volume vis-a-vis the average volume of last 20 session. Look at that aggressive build up, 30% higher, and the stock's also a day's low, down about 7%. Hemen is the other one. I think it's reacted very negatively to the numbers, though the street was saying it is in line. It's fallen below 50 DMA, and the shorting continues on the futures side as the open interest is up about 12 to 13%. Lastly, of course, Tata Steel is in focus post its earnings. It was a howler from European operations. It slipped below the 50 DMA, futures indicating fresh shorting. And this year, Tata Steel has corrected about nearly 6%, and the entire fall I would attribute it to today's fall as well. Open interest up about 20%. Remember, this as a stock, lot of the technical analysts have been suggesting that it is looking technically good if you look at it within the metal space. Let's see if today's dip gets bought or not.
The results spree continues, and Kajaria Ceramics numbers on your screen as well. Just briefly mention that 15% versus 59%, the margins, the revenue numbers, the profit numbers are not enthusing either, and the stock down about a couple of percentage points. But I must say, autos and auto components today have been taken to the cleaners. Let's welcome a global voice, somebody who looks at global markets and looks at India very closely as well. Jonathan Schiessl of IIFL Asset Management joins us right now on the show. Jonathan, good having you. Thanks so much for joining in. Does it seem that while the markets are shrugging off any kind of risk-off mode in this whole past month, despite the coronavirus fears, might finally enter into a risk-off mode, or is it difficult to kind of call that?
Obviously, markets are gyrating with every new piece of news. Hope of hopes come up, markets do well. Clearly, markets are hoping for more central bank and government action globally. But yeah, I think to me it was markets seem very complacent. This coronavirus issue, regardless of the terrible impact it's having in China, but obviously the impact to supply chains and the global economy. So I think markets had been obviously more on the bullish side and hoping for more government action as opposed to the consequences of the slowdown in China.
Do you anticipate money getting pulled out of the equity markets due to this, and not just Chinese equity markets, but the ripple effect on other emerging markets as well?
Yeah, I mean, equities are, before this happened, I was reasonably optimistic for this year. I still am reasonably optimistic. I think the issue is this is, and particularly for emerging markets, actually, as a group, I think this is clearly probably paused that optimism for the time being until we understand the consequences of this virus and the effect on the global economy. I think equities in the equity space still looked okay. Yes, we've had an extremely long cycle, but I think I was hoping that growth would start pushing out from the US into the emerging space. And I think that a lot of the excesses have been driven out from the emerging market complex. And yeah, I think this is, clearly when we get to when we sort of understand the impact of the coronavirus, then probably equities do look quite interesting again if they come off a little bit more.
And not just that, I mean, Jonathan, I was reading a report and it suggested that if this continues for more than a quarter and if it doesn't end by this quarter, then the implications bearing down on companies' earnings are also going to have a more prolonged effect. And then for them to come back into form and kickstart, exports to China or for that matter, where, a lot of bulk of the activity for companies which have auto exposure in China could take much longer.
Absolutely. I think, this is clearly going to cause companies not only short-term pain from an earnings perspective, but I think all multinational companies or companies with global supply chains are going to have to think long and hard about over-reliance on, so for example, China. There has been some movement into countries like India of some supply chains, but I think this perhaps might sort of push that process along a bit more, where companies just simply cannot carry the risk of being too exposed to one country, even if that country has incredible cost benefits.
In light of that, do you see India as being at least the medium, the stopgap beneficiary to this particular crisis that we're having from the manufacturing side? Because up until now, manufacturing was not particularly a strong foothold of India. But lots of measures have been taken by the government to make sure that overseas manufacturing makes its hub in India, and this could be an added opportunity.
I think undoubtedly, I think that's an opportunity we've been looking for at least a year and a bit. I think obviously India does have some hurdles that need to be overcome: land acquisition, labour issues, and I know the government is trying to slowly address some of those issues. But yes, in certain sectors, India can play a significant role, but I don't think India is going to become like an export powerhouse like the likes of China anytime soon. I just don't think there's enough room in the global economy. And I think India's manufacturing is probably primarily focused on domestic market needs as opposed to suddenly becoming a global powerhouse.
Jonathan, well, it's a long time to go to be called an export hub for India, but I'm shifting focus back to Indian equities then. What's the outlook there? Are they looking attractive at current levels, especially after the union budget? What's been the response of the FI community you're interacting with?
Yeah, I think, most of the foreign investors, the budget was a bit of a non-event, if I'm honest. Yes, I think people were happy that from a fiscal perspective, government didn't go too over the top and risk that whole, the fiscal side. But I think clearly the economy yes, it's probably bottoming out, but it has been a very vicious slowdown. And I think market had been anticipating a bit more clear-cut cuts in certain segments, cuts to income taxes. And there is quite a complicated, I think, budget with regards to income taxes and potential helping of the lower income groups. So I think net, the Indian market isn't too far off its highs. Yes, we've had a bit of profit over the last couple of days. Earnings season isn't wonderful. It isn't terrible. It seems to be, roughly on track. But the market looks a little bit expensive here probably, and I think there is some potential for some profit taking. I think, obviously markets are hoping for further action from RBI, from government. Globally, obviously, equities have done well, hoping for that government and central bank action. But I think, India, for where we are, for the valuations and where we are in the cycle, in the short term, it's looking a little bit pricey. But obviously, looking forward, we're quite, confident of this recovery coming through in the latter half of this year, and therefore, I guess that's what the market's trying to price in.
Jonathan, Indian markets per se, they've been expensive, I guess, for the longest time now. And this is something we've been talking whether at current levels it's offering any sort of value. If the money is still flowing in, we've seen some bit of flows coming, back from the FI community. Which are those sectors that you're identifying which still offer some bit of reward to risk ratio in terms of that from the current levels? What is looking attractive basically in terms of sectors?
Yeah, it's interesting on the sector front. We still, as a house, very bullish on the financial services sector. That hasn't really changed. Yes, there's some pockets of value there. Other parts of that sector clearly are sort of classified as being fairly pricey and have been for some time, as you mentioned previously. We like that sector. We still quite like industrials as well, because we do believe that this economy will start to push up, and we've probably hit the base in the last quarter. So those two sectors are good, and I think, quite frankly, anything outside the top 5 or 6 names in the big indices, there is value there. Obviously, as we all know, the indices have been held up by a very limited number of stocks which are trading very expensive compared to their history. You start pushing out into the more domestic stocks, and you do see a lot of value out there. L&T looks very good value to us. And there's quite a few names out there that there is value, but you just have to look underneath the surface.
Jonathan, just one last question with regard to you mentioned L&T from the infra space. Anything from the consumer space, which is very expensive, do you still find any value there?
Yeah, I mean, that's been the classic sector, which has been incredibly expensive for a long time. We've stayed away from a lot of the staples names in particular, because we just couldn't get our head around those valuations. But obviously, Hindustan Unilever delivered fairly good numbers again, and the street's rewarding that one. Look, again, in the mid-cap space, there are pockets of value, but I think as a sector, it is a sector that has been suffering for some time with this consumer slowdown. And to us, the valuations still don't provide a very compelling risk-reward at the current prices.
We'll leave it at that. Thank you very much for joining us this afternoon. Appreciate your time.
Thank you.
All right, Gail numbers on your screen. You've got a net income, which is coming at about 12,500 odd crores. Expectations of the profit figure was about, 1,250 crores. Expectation was about 1,161 crores. So this is coming slightly higher than street expectations. Revenues that were expected to come in at 18,766 have come in at about 17,770 crores. So revenues have missed. Profits have gone up a bit. There is another income component to that. It's about 312 crores in terms of other income is what we've seen for Gail. And the costs have also gone up a bit, I think about 16,210 in terms of costs. But interestingly, we'll have to wait and watch as to see what the petchem volumes have done this quarter, as well as the gas transmission volumes, both of which were expected to go down for Gail, with gas transmission volumes seen low by 0.9% and petchem volumes too seen lower. I think the stock right now is recovering a bit. We've got Probal Sen of Centrum Broking, who's joining us right now on the show. Probal, thanks very much for taking out the time. Profit seems to have come in above the Bloomberg estimate, while there's been a slight miss on the top line. We don't have the EBITDA numbers yet, but your initial take on this. There is an other income component too of about 300 crores plus.
Yeah, I think the numbers on the face of it, revenue is always a function of what the base prices are. So I wouldn't put too much weight on the fact that they've come in lower. But the EBITDA number, from what I can reckon, is closer to about 2,000 crores or so, or rather slightly below that. But it is still definitely higher than what we were looking at. The losses from the petrochemical business at about 85 crore EBIT loss seem to be a bit better. We were projecting a slightly higher loss. So that means that the lower LNG prices seem to have benefited the costs for the petchem segment as well. And the natural gas trading, numbers also seem to be a bit healthier, which is a bit of a surprise given that Asian LNG prices are fairly low. So it will be interesting to hear from the management as to how the trading numbers have been achieved, because one would have expected that, the US trading business, the US part of the portfolio would have probably done worse, but they seem to have come through that, better than what we were looking at. So on a first look, based on the numbers that I can look at right now, it does seem to be a stronger quarter than what we had expected, both on the EBITDA as well as on the bottom line.
Okay, we don't
So
have a
from that
breakup.
sense-
Yeah, we don't have the breakup in terms of how this EBITDA has come up to. But if it's a 2,000 crore EBITDA, is definitely a beat. The expectation was that LPG and transmission income would be the key kickers in terms of the EBITDA to improve, well as petchem profitability was expected to remain weak this quarter. You think that this could be a function of that, and LPG EBITDA primarily due to higher LPG prices coupled with a cut in APM prices that could have worked this time?
I would think so. I think LPG numbers would probably have come in better, but as I said, I think even the petchem EBIT, from what I can see of around 80 odd crores, that's actually a bit, better than what we were looking at. We were looking at a wider loss coming through, given the kind of weakness that is there in petchem prices. So from that extent, I think the cost advantage, given the weaker LNG, seems to have played out in favor of the petchem segment as well. Yes, it has reported a loss, but my sense is that the loss is lower than what most street estimates were factoring. So from that extent, I think it does seem like a slightly better quarter than what we would have thought. We would have to look at the details in terms of volumes to understand, on a per unit basis, how margins have moved and so on. But just as I said,
11.7% margins versus 8.7%. So the margins have also improved this time.
Absolutely. That's what I'm saying, that, from that extent, it does look like a pretty reasonable quarter and definitely slightly ahead of about, 7 to 8% higher than what we were looking at. So from that respect, I think it does look like a...
Probal, you were talking about the petchem losses. I think they've been lower than what the street was expecting. It's 8.5 crore versus 82 crore, which they had posted in the September quarter. EBIT from natural gas is at 985 versus 883. Of course, as Probal was mentioning, we'll try and touch base back with him. The numbers pretty much look in line. The EBITDA margins have been in line with the street was expecting. And the petchem business, I think largely that was meant to be a disappointment this time around as well. But the losses have narrowed according to what the street was expecting. I think Probal was highlighting somewhere about 80, 85, but they posted a loss of just about 8.5 crore. The stock 119.7, it's still down about 2.5% in trade. We'll try and decode the numbers more for you, but I think Probal's back with us. Probal, just a comment on losses on petchem business, and what's the stock rating looking at these numbers? What's the target? Would you revisit the rating?
To a certain extent, I think the petrochemical, and as I said, the loss is a bit narrower than what we were looking at, but the prospects for petrochemical business looking into FY21 do seem to be weaker than what we would have thought maybe even about 6 months ago, primarily because the kind of price weakness that continues to persist. From that extent, I think we will have to probably revisit. We were factoring in a fairly smart recovery in the petchem business in 21 after what is likely to be a pretty weak FY20. But I think those numbers could see a revisit. And we will have to look at, how the US LNG business is looking, given that Asian spot prices are trading at record lows right now. And that seems to be persisting probably for the next 6 to 9 months as well. I think the trading part of the business, the natural gas trading part of the business, will probably need to be looked at as well. So from that aspect, maybe we would expect some revision in terms of FY21. We'll have to look at the numbers closely. But having said that, I think they have probably delivered a slightly better than expected quarter. So from that aspect, it's a bit of more positive. And valuations are obviously at extremely comfortable levels. They're factoring, I think, because of the whole controversy around the AGR dues, as well as the fears around the split of the transmission business. I think the multiples of less than 6.5 times EBITDA, even for FY22, are at extremely comfortable levels. So we remain positive, but we'll have to look at what a more reasonable number expectation is for the next couple of years.
Okay. Probal, on that note, we'd love to thank you for joining in today and giving us your perspective. Appreciate your time.
Thanks.
That's the view from Probal Sen. Now, let's move on. The one pocket that is still standing out, even on a day like this, is specialty chemicals. Without exception, a bunch of stocks are doing well, from the large to the small. Almost everything is stable or doing well. Now, the coronavirus outbreak has hit factories in China, and that turn has pushed up prices of some of the products that come out from the country. I think supply chains have gotten disrupted. Maybe input and output prices respectively would have gotten impacted too. Joining us now on the phone line is Ankit Patel. Patel of Bodal Chemicals, a company that produces multiple chemicals and I presume amongst others, vinyl sulfone as well. Ankit, good having you. Thanks so much for joining in. Can you, for the benefit of our viewers, tell us the key products that you might be operating in which might be getting impacted either positively or negatively because of the supply chain disruption in China?
Yeah, good afternoon. The intermediates, which is the raw materials for the dye stuff chain, that's where the competition is between India and Chinese players. So what is happening is because of this coronavirus going on in China, the manufacturing is shut down, and it's very uncertain when it is going to restart. So that is one issue. And second is because of the no productivity and this threat, also the ports are shut down. So there are a few chemicals that come from China, and the Indian dye stuff industry depend on those. But for our company, the scenario is a bit different because we produce most of the raw materials on our own. So companies that produce, I think, intermediates will have a couple of good months in the upcoming time. And the main couple of raw materials are H-acid and vinyl sulfone. Both and the other intermediate prices have really shot up in last about 7 to 10 days.
Mm-hmm. I presume, if I'm not wrong, you manufacture vinyl sulfone as well. And I heard you mention that you make most of the other raw material products also in-house. So are you integrated and you will not get impacted as a result of this uptick in the raw material prices, I presume?
Yeah, so there are more than 600 dye stuff manufacturers in India, and out of which only few are integrated who make dye stuff and their its own raw materials, the intermediates. So as far as the integration goes, we are the largest integrated player. So we make a highest number of intermediates in-house. So we are going to be affected the least. That's my assumption. There are only about 5 to 6 players who make their own intermediates. So they will be affected very less. Other than that, the dye stuff players who depend on the raw materials from Indian players or Chinese imports, I think they will be really impacted because the Indian prices have really shot up and the Chinese material is not available. So vinyl sulfone and H-acid, we are among the largest manufacturers of those two products. In H-acid, we are the largest, and in vinyl sulfone, we are among the top 2, top 3 largest. So both the main raw materials, the prices have really shot up by 30-40% in last 7 to 10 days.
Okay.
And like I said, only about 5% of our total purchase is dependent on the Chinese supply. So our Bodal Chemicals Limited is not going to be affected much. So the net gain will be very large.
Okay.
About coming few months.
So for you, the raw material cost impact will not be felt. What about the end product prices? Have they also moved up, and therefore for you, will that be a net benefit? Can you kind of tell us and quantify that for us?
Yes. So we have 3 divisions. One is basic chemicals, which is not affected by this coronavirus scenario, but the intermediate scenario has been affected the most. There the prices have gone anywhere between 25 to 40% up in last 7 to 10 days, and there is already market has already started accepting the price. In the dye stuff also we have increased the prices by 25-30%. There also we are seeing positive acceptance of the prices.
Okay, so you are saying your end products have moved up by anywhere between 25 to 40%. Now, how does that impact business segment performances? Because as I looked at your Q2, dye stuff, dye intermediaries, at least these two had revenue declines anywhere between 5% to 50%. How does that change in Q4, for example?
So there was a decline in the numbers of top and bottom line in the last quarter. The reason was that the overall market scenario was a bit dull. Also, the raw material prices, because of the crude prices, were low. So the raw material prices and the finished good prices were low. So that's one reason. And second is last financial year was a bit extraordinary because of some Chinese chemical plant shutdown. So if we compare it to the last year, then there was some extraordinary margins there. But this ongoing year was a bit sluggish. So that's why the first 2 quarters was a bit slow. So fourth quarter, we should see, I think, a big jump in terms of top and bottom line.
This YOY comparison and QOQ as well, you reckon? Both revenues and bottom line should move up.
Yes.
Okay, and I'm presuming that because you don't get impacted too badly on the margins, they will not get impacted negatively, but can they get impacted positively? Do you reckon you can get back to 16-70% EBITDA margins?
I think the fourth quarter should easily surpass the 16-17% EBITDA margin, yes. Because our purchase will have some effect because of the China, but that is only 5%. But our finished goods, about 80% of our top line comes from dye intermediates and dye stuff divisions, and both the prices have gone, like I said, prices have gone up by 25 to 40%.
Okay. Ankit, hi, good afternoon. You've mentioned that H-acid and vinyl sulfone prices have gone up by 25 to 30% in the last 1 month. And you've also highlighted only 5% of your raw material currently gets imported. So net, I think it's whatever is happening, no production in China is helping a company like yours. But could you also clarify what percentage of your revenues currently come from these two places, H-acid and vinyl sulfone?
Yeah, so H-acid and vinyl sulfone combined it contributes around 30% of the total revenue. So we produce and sell H-acid and vinyl sulfone. We also use it for our internal consumption to make the dye stuff. So if I include both, then it is around 30 to 35%.
Okay, so 35% of your top line is coming from there. How does this entire event impacts your exports? Could you just give us a sense, since I feel 40 to 50% of your revenues are exported?
Yes, the export, we are doing around 50% exports now in the last financial year and the recent quarters. It is definitely going to help the exports as well, because we do export to few countries where China also competes with us. Right. So in those intermediate products, now the only Indian players will have the opportunity for some time. So I think that will really benefit.
In percentage term, what sort of additional benefit do you get in terms of exports, since you said that there is competition between India and China to export to the same country?
So basically, that particular market is catered by Indian and Chinese players. And I would say last about 20-30 days, there has been no offers coming from the Chinese players. It's only Indian players who are catering it. So I think Indian players will have a few months of 100% supply opportunity to these some of the players in Northeast countries.
Are you getting additional export orders or inquiries?
Yeah.
Yes, last about 3-4 days, it is the moment as I happened, and now, so earlier I think last 10 days what happened was the prices are going up. So I think not too much of order booking was there, but last 3-4 days it has started happening already.
Okay, just one last question from my end. Once the production normalizes in China, what's the outlook on prices then? Do you see them correcting by as much as they went up, or there is any territory that the street will settle with?
So last 4 to 6 months, it was a very dull period for our entire sector. But about 1.5-2 months ago, before this coronavirus happened, the prices had already been corrected. So I would say that this whatever extra effect of 25-40% of coronavirus is happening, it will be corrected, but it will not go back to the low levels which were about 3 months ago, 4 months ago. That was the lowest we had seen in about 4 to 5 years.
Ankit, just one question. These companies that you mentioned, the northeastern countries who are contacting you, when you are entering into fresh supply deals with them, are these longer term in nature, or are these very, very short term deals?
These are usually anywhere between 30 to 60 days deals.
Okay. We wish you all the best. Ankit, all the best for a robust Q4, and thanks so much for speaking to us.
Thank you.
That's the view from Bodal Chemicals. Vinyl sulfone is one, which is also a raw material for them, but essentially the larger takeaways seem to be that they do not get negatively impacted because the prices of the raw materials have moved up, because most of their production is in-house and captive, but they might gain a little bit on the end product prices moving up, and margins which had moved down. EBITDA margins in Q2 were about 8.5%. The management saying the margins could move back to 15-16%. So from Q2 to Q4, I don't know the Q3 numbers at hand, but Q2 to Q4, it could actually move up almost 1,000 basis points or 800 basis points, which is almost doubling of the EBITDA margins. So pretty strong going there. I think our technical experts are with us, and before we dwell into the markets which are correcting, since all of these stocks are doing well, Hemen Kapadia of KRChoksey with us, and we'll also get in Ajit Mishra of Religare. Hemen, just one quick thought really on some of these specialty chemical companies or chemical companies as the case may be, all of which are shooting up in trade. There's Bodal Chemicals, Kiri, Akshar, I think Deepak Nitrite is in the green. A clutch of these names are doing very well for themselves. Anything that looks good on the charts?
I think the first one, very good afternoon to you, Neeraj. Thank you for having me. I think the first one that you mentioned, Bodal looks nice. I believe a longer term bottom is in place. A medium term bottom, definitely yes. Intermediate uptrend, yes. Things are turning positive technically, looking up after almost 2.5 years. So I couldn't check out all of the ones you mentioned, but at least the first one that you mentioned seems like a distinct technical turnaround from a longer term point of view, Neeraj.
Okay, let's talk about the markets, which are not looking all that great right now. Hemen, I'll stick to you, and then we'll get to Ajit's view as well. What's the call on the index today?
Well, frankly speaking, the 12,150 came out of thin air. I'm not sure how that came and how it should have sustained. But now, on the other hand, we went down 500 points, we went up 500 points, and we're down 150 points. So, net, I still believe that there's going to be one more attempt at 12,150. I don't see it going too much beyond 11,950. That's today or tomorrow. And we'd see a bounce. We'll make an attempt at 12,150. If we take out 12,150, Neeraj, then we see another 140 or 150 points on the upside. But beyond that, I think we are running into historically strong resistance. I don't think the market is set for a big bang breakout from these levels. The mechanical indicators on the weekly charts have signaled a sell. So it's mixed. The monthly is fine, weekly is toppish, daily short-term downside, but oversold on the intraday. So it's all over the place. Simply put, 11,950 doesn't break, first thing. Secondly, about 12,150, 100 or 150 points. Beyond that, I don't see too much.
Okay, we'll come back and discuss your stock ideas as well, Hemen. But let me also bring in Ajit Mishra of Religare Broking, who's joining us on the show right now. Ajit, a quick take on the indices. Second day on a trot that we are seeing a pullback on the indices, and now just about flirting with 12,000. What's the call?
Good afternoon, Devina. So, Devina, yes, after 2 weeks of roller coaster ride, today also we are seeing that Nifty is witnessing selling pressure. But I doubt there will be any volatility that we had in the last 2 weeks. So earlier it was like 11,900, which is the 100 days EMA to provide the support, which is earlier as a resistance zone. So this time at least, I believe that Nifty would respect that level, and upside that close to around 12,250 to 300, that's the immediate resistance area. So considering the risk to reward ratio, I believe it's a buy opportunity with 11,900 as stop loss and close to around 12,200 to 300 is a target area.
Okay, that's on the indices. Let's talk stocks then. Ajit, I'll keep it with you. What are the stocks you're recommending for the afternoon?
So on the stock specific front, we are still seeing at a mixed trend. So Asian Paint is one counter which is looking very strong on charts. So despite what we are seeing in the index, it has been maintaining positive bias since long, and in fact it has witnessed a fresh breakout of late after 2 months of consolidation and trading at the record highs. Overall, all the chart pattern, the kind of volume rise, everything is in confirmation that this momentum will continue. So 1810 should be a stop loss for Asian Paint, and one can buy at current levels for 1950, 1960 as a target. On the other hand, PSU banks, they are still struggling, and in fact, some of these counters are trading at their 52 weeks low, and PNB is one of them. One can go short in PNB at the current levels for target close to around 52 with 60 as a stop loss.
Hemen, what are your stock ideas?
Yeah, I'll play for a small bounce, Devina. Firstly, a buy call on Kotak Bank. I believe we've been moving sideways, but the intraday charts seem better. Taken support on the 55-day exponential moving average. The hourly indicators have given a crossover buy. So a buy on Kotak at 1655, stop loss 1640, target 1685. Secondly, a counter buy call on HDFC Limited, not HDFC Bank, HDFC Limited, Devina. We've gone up for 4 or 5 days. We've come off. We're on the verge of giving an upward key reversal today. The daily MACD is giving a buy. So I believe we're going to test the recent high. So buy in HDFC at 24.10, stop loss 23.85, target 24.60. I believe it should go to 24.90 or 2500 finally. Devi.
All right, Samir Kalra of Target Investing is also joining us on the show this afternoon. Samir, good afternoon to you. Lot more movement in terms of the broader market space and the profit taking that we're seeing there within the mid caps and the small caps today. Do you feel that, when we saw that kind of a big bang risk on appetite that came back into mid caps and small caps, that is something that it was temporary in nature and it could actually go back and we could once again see polarization play out in a big way because of the fact that there is still a lot more uncertainty in the system?
So I think you might say it a profit booking, or maybe the buyers who are being aggressive pre-budget have taken a step back, and that's why you see more of selling pressure again coming back to those names. Whether the whole buyers are removed out of the system and they've become the sellers, I don't think so, because if you see the institution numbers, there's hardly much of aggressive selling happening on the either side from a FII or a domestic guys. So I wouldn't go too much cheap into it. Yes, there is a kind of a risk of play coming out because let's say the numbers of cases reported under the virus globally is now surging. And next 15 days is very important for China production. If that doesn't come back online to somewhere, whatever extent, and they still keep a lockout in most of the cities or most of the outlets, then the global supply chain, especially autos, will take a very big hit, according to me. So I would still put a SIP in mid caps. Even as of now, the polarization story looks good, but again, me putting money in Asian Paints at 50 or 60 times, again, I'll take a SIP route even if I want to do that. I'll not totally exit that mid caps and shift to large caps. That again, that story will play off.
Samir, today you mentioned about autos will get impacted. They are being taken to the cleaners across the board. What did you make of some of the auto component results that came out as well? Bharat Forge, not the most impressive. Motherson Sumi's cracked post its numbers. What are your thoughts here?
So I think, Neeraj, again, where I thought that October, November will be more of a bounce and exit opportunities for people in autos rather than entering or buying more at the lower levels, that's somewhat getting proven right in a way. Because even if you see local registration numbers, they are down, right, still 20% down, 15% down. Globally, you're still facing a recession. So I can't expect a Motherson or a Bharat Forge numbers to be really well or even meet the estimates. Because what is happening over there, the capacity utilization globally of auto companies is drastically coming off. And now what has happened, because auto industry or auto supply chain works mostly in just in time, whether it's going towards a logistics, exporting somewhere or importing from somewhere, so it goes very just in time. And that's why the auto component companies will not be able to take the benefit, at least from the Indian perspective, what I feel. And because certain part, at least 10 or 5% of whatever auto component you see gets imported from China. Whether it's even Motherson, right? They can't be totally self-dependent on the system. Even a nut and bolt not coming through China really halts it out. We have seen Hyundai shut down, we have seen Kia shut down the South Korean units. It's not big, and automobiles are one product where even a nut bolt missing from an exact supplier, your production totally comes to halt. So that's why I feel even right now it's more of an exit point, even after taking such a big knock from the highs, at least, whether it's Maruti, Motherson or Bharat Forge. I still feel it's a better to exit and take out whatever profits you have, even if you have, and save your capital from it.
If you have, yeah, that's a big thing as well. I think we'll get in the managements of Bharat Forge and Madison Sumi in a bit. Keep that at the back of your mind that these stocks are important. The numbers of Bharat Forge, both on the automotive side and otherwise, left a bit to be desired. Ajit, these two stocks on the charts, Madison Sumi as well as Bharat Forge, either of them essentially, how weak do the charts look?
So, Neeraj, No doubt, Motherson Sumi, after retesting this, crucial resistance zone of moving averages.
Just a second, Ajit, give us a second. We'll come back to you because I think we have the management of Bharat Forge joining in. So I think it's important to get in Mr. Baba Kalyani to talk about these numbers and the outlook ahead. Mr. Kalyani, good having you. Thanks much for joining in. Tough quarter, arguably tough times as well. Is there a positive that we can derive out of these numbers, Mr. Kalyani?
Two, three things. Number one, as I had said even during the last quarter review, we expected to have the second half to be pretty difficult. And I think that's exactly what we are seeing because the domestic market is difficult from a demand point of view. And the good thing is I think we have bottomed out on this, and going forward we are beginning to see some growth taking place. So I think that's the positive from this. In terms of our business, we are seeing a lot of positive traction on the pass car related business, and there we are seeing growth even now, and I think that growth will continue going forward. So this is as far as the domestic business is concerned. External business again has been a very disappointing quarter for us, and we have taken a lot of actions. Again, as I had said last time, we are moving more towards changing our product mix from steel to aluminum. We believe the future is in the chassis related business in aluminum because that is irrespective of whether it's an IC engine or an EV, you still need these components, and that's where we are good at, and that's where we are focusing. And we are beginning to see a lot of good things happening there, but we have to restructure our business in Europe to move it to aluminum, and we are doing that, and we will see in this year 2020 a much better performance coming out of there too.
Mr. Kalyani, just to dwell on that point a little bit more, you've stated your intention of becoming a more diversified forgings player with marquee global clientele. How is the global environment at this point? I mean, which also pertains to leads to the question as to future visibility of this particular segment doing well for Bharat Forge.
It's something like this. If you don't do anything else and remain exactly where you are, the global environment is extremely difficult. But we have not been doing the same thing and being where we are. We have invested heavily in technology, in knowledge, in many other things, and because of that, we see many new opportunities in the global environment, especially on the pass car side, especially on the chassis side. And I think we will continue to see growth there, which many other companies may not be able to see. So we are quite confident that we will grow. If you look at the traditional business, the CV business, obviously the numbers tell you what the story is. The Indian CV business is down 50-60%. The global CV business is down 30-35% and it's a cyclical business. Globally, it's a cyclical business. I expect next year, 21, the cycle to start coming back. But that's a known phenomenon. That's no surprise as far as we are concerned.
So in terms of so in terms of revenue visibility from these new capacities and the shift to platforms-based model, what kind of revenue visibility do you have in the upcoming few years?
I think I would only say this, that we will start seeing growth. And if you look at the pass car side, we are pretty much well entrenched with all the new players in India on the pass car side. We're getting entrenched with all the global players on our aluminum business. We expect the aluminum business to grow in Europe from a 50-60 million euro business to over 200 million euro business in the next 4 or 5 years. So that's the kind of growth that we are seeing. And that's the trend in the marketplace. And except that this requires very specialized technology, and we have this technology because we have invested in this technology in the past few years.
Do you see a feasible growth rate of 10% as per what most analysts have been pegging in with your new capacities and new products? From there, a 10% growth is expected. Is that conservative, or you think that's slightly aggressive and you may fall a bit short?
I think, going into FY21, we should look at those kind of growth rates. But if you look at our track record for 20 years, we have had much higher growth rates cumulatively. So I would expect, if you look at the next 5 years, then we should see a little better growth rate. But for next year, I think somewhere in the 10% range is a good range to target.
Okay, and industrial forging, sir, I believe, your industrial forging, the share in industrial forgings is also climbed, jumped to about 26% this year from 17% just a few years ago. Your global clientele is pretty strong, Boeing, Rolls-Royce. Do you feel the segment expanding more, and what kind of share are you expecting this to capture?
We will continue to increase our presence in the global engineering business, the clients that you talked about, global Rolls-Royce, Liebherr, etc., that's in the aerospace side of the business. We have a pretty good strategy on the aerospace side of the business to keep growing, except, with aerospace is a very cautious OEM in terms of all the problems that you have seen in the last 2 years happening. So it takes time to grow that business. And we are not growing in the aerospace business on the structural side or on the low technology side. We are growing the business in areas where we have strength, and that is metallurgy, metallurgical technology, high machining technology, those kind of things, digital technology. So that's the area where we are growing. And we will definitely grow in this segment. This segment will become a reasonable segment for us in the next 4 odd years.
Just one question from my side with regards to margins this quarter, which took a beating despite better than expected gross margin performance on account of significant negative operating leverage benefits that came in. Put pressure on the margins? And also, are you expecting to see other expenses and employee costs coming under control in the upcoming quarters?
Yeah, I think in the next few quarters, employee cost takes time to get into shape because it's a complex process here to follow. But we have a massive cost reduction plan, and that's going exactly as per plan. And we will get on the operating side, our manufacturing costs are pretty much under control, even with lower volumes. We have done a good job on cost reduction, and we are doing the same thing on the fixed cost reduction. And as we see a small uptick in volumes, I think we should start seeing expansion in our margins.
Mr. Kalyani, just one question from my end. The cash in the books, of course, has grown this year. It's at 1930 crore, and even the long-term debt has gone up, as a result of which we've seen the finance cost for the quarter at least were higher on year-on-year basis. Could you just give us a sense with regard to debt reduction plans, and also how do you plan to deploy the cash which is there on the balance sheet right now?
Okay, two things. As far as debt is concerned, we have a repayment in this quarter of 200 crores, so the debt will go down. As far as interest cost is concerned, the interest cost that you see in the numbers is half of that comes from the revaluation of debt because the rupee got depreciated in that quarter, and you will see exactly the reverse happening this quarter because the rupee has slightly appreciated. And with the new regulations, accounting rules, a large part of loan revaluation sits in interest costs.
Okay. Mr. Kalyani, we'll leave it on that note. Appreciate you joining us, and all the best to you for FY21. That's the management of Bharat Forge. Of course, the number is not looking good because of the slowdown he mentioned in both domestic as well as export market. The revenues, by the way, from both these markets have been down over 30%. Finance cost has gone up, but they said they will be paying almost 200 crore of that in the current quarter. Revenues for the quarter were down about 36%. Okay, that's Bharat Forge for you, which has reacted negatively to its numbers. But we've also got Madison Sumi, which came out with its numbers a while back. Let me quickly get a check on the stock of Madison Sumi. If you could just pull up the stock. It was a quarter which was below estimate for the company. Top line saw a decline, and finance cost was also on the rise. Forum Bhat spoke to the chairman of the company, Mr. Vivek Chaand Sehgal, and here is a slice of that conversation. Listen in.
I think it was a very challenging quarter globally, and in spite of all the challenges, I think our company and our teams have done a phenomenal job. Our revenues are almost at stable. The SMRPBV portion is in the European side, the American side is almost stable. Our EBITDA actually has been maintained at 9.9%. On consolidated terms, definitely our number in the rupee terms has come down. But the effect of that is basically because the euro in Indian rupees translated is about 4.5% down. So if you take that into consideration, and also that we have actually brought down Brazil, this impairment is there for about almost 4.5–5 million euros, about 40 crores, and things like that. So I think, and under the circumstances, it's a very good effort by all our people. The team has done very well.
Okay, so my next question would be that there was a significant increase in the finance cost this quarter for the company. So any specific reason for this increase, and do you see this cost going down going forward?
So the finance cost, I think you mean the impairment that we have done. So probably that's what is showing over there. But yeah, it's a one-off cost. It's not something which is going to recur.
Very well, sir. So my next question would be that both SMR and SMP reported a decline in revenue as well as PBT. So any specific reason for this, and do you see this changing in the future?
So it depends upon, are you looking at the rupee terms or in the euro terms? In the euro terms, it's almost the same. Last quarter, we had given 1,400, 1.4 billion euros. At this moment, it's 1.394. So I think it's a very small change. But if you look at the EBITDA, it has actually gone up from 82 to 85 million. So in spite of a little bit lower on the sales side, the EBITDA has shown better. As a percentage, we maintained the same as last quarter, which is 9.9.
Very well, sir. Sir, new plants in Hungary and Tuscaloosa were expected to aid growth for SMR. So has there been a ramp up on that front, and do you see this aiding growth going forward for SMR?
So actually, it is not for SMR, they are for SMP, which is the interiors and exterior business. Yes, they are ramping up. Probably this quarter would be the final quarter when they will come up to their normal levels. So, or the established levels of about almost 1,300 cars per day. So they are very much close to that. And we think this quarter probably would be the last quarter where there might be some inverse effect. But otherwise, looks very, very good. I think the team is coming up very well over there. We have reduced quite a lot of the losses over there, but I think all of them are doing a phenomenal job at this moment.
Okay. Sir, and could you throw us some light on the greenfield plants per se? So is this expected to aid margins or growth for SMP going forward?
Absolutely. I think as they stabilize, every day we can see there is an improvement that's happening over there. So kudos to the team. I think the team is doing a great job. Under the circumstances, they're doing good to keep up with the supplies to the customer, and also more importantly, the quality and the delivery and all those particular aspects are getting better and better.
Okay. So as on September 2019, the company had about rupees 1.43 lakh crore worth of order book in hand. So has there been a change in this, or what is the current order book which the company has?
We guide you every 6 months. So in March, we will guide you again with the new order book and all that. But I'm sure we are winning a lot of orders out globally. So definitely the numbers will be declared in March 2020.
Okay, sir. And any capex plans which the company has?
So the good news is that up till now, all the order book that we have, all the capex is almost done. So other than maintenance capex, we don't think there is much capex left.
Okay, so lastly, could you give us some idea on how FY20 is expected to be for the company?
So my expectations personally will be that 1st of April onwards, India will improve very well. And I think all the plants all over the world would have been more, you can see a global revival of the cars and all that, whatever confusions that were there in the global outlook, they would have all been addressed. So I feel April onwards, you will start to see a better demand, better consumption also. Only one area of concern is China, which is the coronavirus. How that impacts globally will be seen, I think, in the next one and a half months coming forward. So in some sense, it augurs very well for a country like India, because there is going to be definitely a movement coming from China. A lot of the parts for the auto anchs are going to be supplied from India. So I think in the long term, in the 6 months to 1 year, 2 years, you will start to see that kind of a trend also happening. So I think it augurs very well for India and also for the world.
Well, the managements are hopeful. Let's see if the prices improve a little or no. Just wondering, Ajit, we were trying to get your thoughts on these stocks. Motherson or Bharat Forge, do you have a thought on either one of them?
Stocks rebounded from their monthly support zone in last several months, but Motherson Sumi comparatively looks weak to me, considering that it has multiple hurdles close to around 150. It couldn't surpass the same after multiple attempts, and now we are seeing selling pressure. So in case if somebody wish to go long or accumulate on dips, Bharat Forge, I believe, is a better candidate. 470 is a very strong support area for Bharat Forge. So in case if it retraces close to around that level, one can start accumulating.
Start accumulating at some particular levels, but for now, look at that. By the way, just mind you, as we said, there are few companies that are just doing really well. One of them is Avenue Supermarts, which is up 6%, 2427 now, so trading at fresh life highs for itself. Not to forget that Trent is at 693 in a matter of 2 days. Trent is up 100 rupees. We speak about Avenue Supermarts. I know with a lot of fanfare, Trent is not far behind really in terms of gains in the last few days. So really strong showing there. And some of these chemical related names, so Neogen Chemicals, Alcala Mines, Fine Organics, Solar Active APIs, Alchem Labs, all of these, anything which has got this connection to the Chinese supply chain systems are all doing well. I'll also talk about the power cut in West Bengal, but before that, or the price cut in West Bengal, but before that, Samir, do you track any of these companies in the specialty chemical space bottoms up, and which you think has benefited and therefore could be worth looking at?
So I think Alka can be one of the beneficiary because they are doing the capex, and 2019 also they have done around a 30% capex which has come online. So the capacity is able to support that. If you talk about Deepak Nitrite, the Deepak Phenol part really helps out, but the only negative is they don't have much capacity left to be utilized, right? So the prices can be the trigger over there because phenol is all imported and they are the mainly domestic players. So the price can be a play over there. Kiri Industries is one of the players who can do it sufficiently, but again, it's more of a speculation and anticipation to work it out. Aarti Industries is building up on the capacity. If you see every quarter, they come up with some addition of the capacity or not, and they're doing a lot of R&D. So these 3-4 can really benefit. Deepak, I think, can really benefit on the pricing because the phenol use is not stopping. The imports have almost come off, even in the monthly data if you see from the Jan end. So they are gaining kind of a market share automatically even before all this started to come up. The pricing can really play off in Deepak Nitrite, and this can really double the stock at a certain point of time.
So let's wait and watch as and when and if and when that happens. By the way, we should, Hemen, I would want to take the other two biggies with you, and which of the chart looks better? It's a tough one, but Avenue Supermarts versus Trent, which is the stronger chart?
Well, frankly speaking, Neeraj, it's slightly like Mission Impossible because both look solid, strong. The only thing I like about Trent is simply because it's got more data. So I have a slightly more grip on things, but it's like tossing a coin, very little to choose. But I'll just go in for trend simply because I have data for the last 5-7 years. Otherwise, both look great.
Okay, Trent in fact has been moving higher post its numbers after posting a very strong same-store sales growth, but your Nifty loses. Z is now down nearly 7% in trade, and M&M Street was saying the numbers were muted, or of course the expectation was factored in that it was a weak quarter, but look at the reaction in the stock. It's down about nearly 6 to 7%. All right, we'll discuss all of these stocks with our experts on the show, but meanwhile let's also find out which are the Fab Four stocks which feature in Sharad Dubey's list. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is SHKL. The stock is up more than 6% today after it came out with a good set of quarterly numbers, with the fragrance revenue segment rising by almost 14% and the net revenues going up by almost 11%. The strong demand was seen across its core categories, and also the debt levels did reduce by almost 97 crore rupees. One important thing company came out with its press release was that it has achieved a final closure for its Netherlands arm, for its fragrance ingredients and its research development activity business. Up next is Inox Leisure, which is up almost 4.7%, hitting its lifetime high. On Friday itself, the company did come out with a strong set of numbers, with the net box office revenues rising by almost 18.4%, and the Q4 content pipeline really looks good, with releases coming in from the Oscars as well as movies like Love Aajkal and also Booth. Up next is FDC, which is up almost 7.7% after coming up with an operationally strong quarter, with the revenues rising by 25% and the profits almost doubling. So this growth was seen due to the export growth as well as brands such as Ziffy, Electrol and Enerzel. And the last stock of the day is Godfrey Phillips, which is up almost 5.9%, seeing its biggest intraday gain in 2 weeks. It did come out with a good set of quarterly numbers as well, with the tobacco segment rising by 13% and the retail segment rising by 21%. Back to you.
Thanks a lot, Sharad, for bringing those Fab Four stocks for us. But moving on, inflows into equity mutual funds hit a 5-month high in the month of January. BloombergQuint's Yash Upadhyay spoke to NS Venkatesh, CEO of Association of Mutual Funds of India, to understand what led to the rise in the equity inflows. Listen in.
I would say that it's a wonderful month, in the sense that you really, with the budget expectations which were there in January, so a lot of money had come at that particular point of time, and essentially if you're looking at it, the flows have come across the spectrum, whether it is liquid funds, whether it is debt funds, whether it is equity funds, whether it is SIP for that matter. So I think it's a positive month for the mutual fund industry. I would say that now with this budget behind us, I would say that it's a good budget, a pro-growth budget. So we believe that this momentum will continue. We believe that at least this industry will grow by around 15 to 20% during this calendar year.
All right. But one area of concern continues to remain on the debt side. We had another large company from the telecom space, which had issues, and there were mutual funds which had to essentially segregate that their holding in that company as far as their exposure was concerned. We saw that again, the credit risk schemes, they have seen an outflow. Although the number of the value of the outflow, that has moderated over a period of time. What exactly do you think needs to be done in order to boost the investor confidence in this category?
No, whatever is required, definitely we are doing there. There's absolutely nothing, no steps are being left behind. We are, as an industry, we are doing whatever is required. The risk management processes are tightened, the credit underwriting standards are tightened, all those things are being done. But being a credit, there could always be one or two defaults here and there which can come and hit you at any point of time. Right. If you look at the telecom player, at one point of time he was supposed to be one of the best players. Right. So you can't expect that we will not invest there. So it had happened in that fashion. So I would suggest that that is why we are again and again talking to the investor and saying that there is a market risk attached to your investment. So you should look at that market risk as well. The fluctuations in the NAVs can be caused because of this sort of credit risk thing coming in and where segregation happens. But the efforts put in by the mutual fund industry is in the right direction. They have tightened their underwriting standards. They have improved their risk management standards. The SEBI as a regulator has come out with a lot of circulars and guidelines to ensure that the credit underwriting is improved and risk management principles are improved. So I think we are taking the right steps to protect the investors' interest.
And I hope that message is actually going down to the investors. But another indication that the investors are taking this information in a positive light is the fact that we've seen the SIP number yet again hit an all-time high. It's come in at 8,500 crores plus, and this is for a 13th consecutive month that we've seen the SIP number in the 8,000 crore mark. What do you make of the number of SIP accounts that were opened in the month vis-a-vis the same month last year? And most importantly, we have been in this band of 8,000 crores for quite a long time. It's been over a year now. Compared to the other periods, be the 6,000 to 7,000, the jump has been slightly longer than what we've seen historically. What are your thoughts there?
My thoughts are that essentially when the market was in a very, very difficult mood, at that time also the flows into the SIP were around 8,000 crore. So right. we should actually say that the patience of the investor, the maturity of the investor has to be highlighted there. So now with the market gaining some momentum, we should see the increase in the SIP flows happening. Maybe we will touch the 9,000 crore maybe in a couple of months' time. So that can happen. We are seeing that the retail investor is getting matured by day. So we are quite confident that the SIP flows will increase from here onwards.
All right, and you mentioned briefly about the budget being pro-growth and that it has managed to, take all the right boxes as far as your expectations are concerned. But one of the aspects that the mutual fund industry wanted and actually received was the removal of the dividend distribution tax in the hands of the AMC. But there are also certain concerns that this might reduce the popularity of the dividend giving schemes or the dividend options of the mutual funds. What are your thoughts over there, and can you give us further clarity with respect to this?
No, I would only suggest that we have to wait and see how it pans out at this particular point of time. It has moved away from the DDT has moved away from the AMC level to the individual taxpayers level. It is getting taxed, and the TDS on the dividend is still there at around 5,000. Anything above 5,000, maybe 10% TDS has to be deducted by the AMCs, where we believe that maybe the government should reconsider that limit. But we need to see this, how it pans out. So it will take at least a couple of months' time after the new financial year starts to see how this impact will affect the flows into the dividend distribution sort of funds.
All right, and so lastly, it has been an exceptional month, and obviously we would all wish for this outperformance to continue. But what are you reading? Is this just a one-off as far as the flows are concerned, or do you expect that across the board, like we've seen in this month, that most of the categories they have received great inflows, multi-cap schemes, your large as well as the mid and small cap schemes. In fact, mid-cap schemes since April that we have this data available has received the highest inflows. So do you expect this outperformance to continue going forward as well?
I believe it should continue for the simple reason that the budget is a very pro-growth budget. It is also putting some money into the hands of the investors. So naturally, you should see them coming back into the investment route. And I believe that agriculture also has been taken care of. So the wealth gets created at the rural places. So I think those monies will finally find a way into the mutual fund industries. So I personally believe that the trend that you have just now observed will continue over the next 12 months period, and we should grow. This industry should grow at least in the range of 15 to 20% in the next financial year.
All right, and despite what the equity markets are doing, at least on a month-on-month basis, you continuously see the retail market participating. You're seeing the SIPs going up, the equity funds doing what they're doing. So at least that's the silver lining in terms of the domestic market participation through it all. Z is one stock that I want to focus on right now, and the stock's down 7.5%, along with the likes of M&M and Tata Steel. Three big losers on the index are down more than 5%. Tata Steel is down about 6%, and these two. Z on Friday's session was, I think, the top gainer, and that too with gains of about 6 to 7% in a similar range. And today, that's the lowest point of the day for Z. It's approaching 200 pretty quickly right now from taking, from all the talks around the stake sale and that no fresh equity would be sold below 400. That was the clause, and now it's at about 230. Samir, quickly on Z.
So I think quickly get out. Let's put it that way. I've been telling it since 4:30 because the whole industry has changed. And when your promoters are only 5%, whatever said and done, even if they are in active management, nothing to be discounted over there. But the only point is, again, the investors, if they start controlling the liquidity of a stock, especially let's talk from that technical point of view, it really puts pressure on the system. Fundamentally, the regulations changes. If you see past couple of quarters ago, the revenue growth, especially from the ad side, has really flattened out, or it's not even there. Let's say it's gone to almost a degrowth because they are doing a price cutting as well. So advertisers are now in, at a better negotiating place as they were pre this regulation. So there are a lot of channels which are facing the same. Now when the regulations, so earlier you were unregulated industry in a certain way. Now you've become regulated. Now when you're only able to charge a certain amount per channel, then it really goes high on your revenue hit. So subscriptions were majorly through Dish TV, which is already degrowing in a certain way and facing a lot of
and the cash drain, which is
feasibility issue, and the cash flows are going down. So I think a lot of issues are there in Z Media, though it comes out as a larger TRP gaining network. But again, the financial viability of what it was pre these kind of crises and what it is now, especially under new regulation, it becomes very difficult to sustain these kind of cash
flows. So this is no longer just a promoter-related issue. This is a business-related issue.
Now there was an MCA probe which they have confirmed.
Yeah.
They've confirmed the stock exchanges.
That was always, for me, a additional issue. Because when you were coming in regulations like this, when you are regulated by the government and you have a per channel price to be paid maximum, right? That's where the whole system and the cash flows get realigned. Because you again are dependent on the advertisers. Advertisers are really not a good place to be at negotiating table, and giving them the power, they'll really push and pull. And even if you see the advertising growth has come off even while spending of HUL or other, let's say, consumer staples, which were one time the largest advertising slots, they also have internally come off on a quarterly basis. Being a festival season, there was a drop in quarter-on-quarter numbers on all consumer staples advertising spends. That was really, for me, a negative side.
Fundamentals have been subdued because of course, slowdown that we witnessed. I think there is more to it now beyond fundamentals, and the recent one is owing to corporate governance. They've said that we've received a letter from MCA, and there is some probe which is ongoing. The recent correction is, I think, on account of that.
So that's why I said get out quickly. So
it's a double whammy of sorts, because business prospects is also not really working.
Even if your investors, majority of investors got in at 400, 430, they'll also start to liquidate. They'll not wait for the MCA probe report to come out. So there will be a liquidity increase from that end also.
Okay. Bajaj Finance, and that one's at 4,700 plus now. So 4,730 for Bajaj Finance, and this is just going one way. There was that initial apprehension around the QIP time, whether or not they'll be able to justify the kind of valuations and the kind of money raise that they've done from the QIP by the kind of growth rates that they've been posting, where they've on their own accord and on a very conscious basis tried to bring down, and 35% growth from 40% is also not a bad number. But this one's really taken once again the fancy of a lot of investors. 47.26. But is that this is not much of a trading stock, but nonetheless, let me come to you, Ajit. So, would you see any short-term of mild short-term trade in a Bajaj Finance?
So, Devina, yes, the trend is up. If you talk about the levels, if you see the consolidation that the stock had witnessed earlier, so the upside breakout area was close to around 4,300 mark, and the overall range was close to around 300-400 points. So, sorry, 1,000. So, in that case, we have reached that mark. But considering the momentum is intact, one can still hold the long position with 46.50 as a stop loss, and upside is open.
Okay, the big ones are getting bigger, the expensive ones are getting more expensive, and no taking away the fact. By the way, this doesn't mean that we are only talking about Bajaj Finance and Avenue Supermarts. Those might be up today, but across the spectrum, I think we are seeing the expensive names and the larger names becoming even more larger. We've seen that in real estate with Godrej Properties. We're seeing that a clutch of spaces, HUL. By the way, this morning, I don't know what the price right now is, but this morning HUL's price was 2155. It's 2161. That's mammoth. And of course, Avenue Supermarts crosses the 1,50,000 crore market cap mark as well. So the going is looking very, very strong.
I was listening to your conversation with Ramdev, and when you asked him about what is it that you feel at this point, will be a little bit of a setback. He said originally a company at 70-80 times PE, we wouldn't have touched it. We wouldn't have it would have been a case for disaster if you were to get into a company at 70-80 times. But that's completely getting changed.
In fact, now people are not touching companies at 3, 4, 5 PE. It's just no wanting to touch them with a barge pole simply because you don't know when the uptick will come in. Yeah, you're right. And that was actually one of the highlights of the Ramdev conversation. But look at that stock. That's up 10%, 2519. And the beauty is, just before getting closing strategies, the beauty about both the QIPs, you see the two stocks that have gone up the most today in terms of hitting fresh highs are Avenue Supermarts and Bajaj Finance. The beauty about the QIPs are that they were large QIPs and they got larger response at 4,000 crores. It's not a small QIP, and it got demand worth 42,000 crores if sources in the fund industry are to be believed. Bajaj Finance, the QIP, got demand worth 50,000 crores. People at that valuation are willing to put in 5 times, 6 times, 10 times the paper on offer, and that just shows you what global money is wanting to, where the global money is wanting to get at, and that is what is driving the markets. But big moves, really quite crazy out here. We'll try and talk about some of these maybe tomorrow on IO and First Word too. But closing strategies, 10 minutes left for close. Hemen, I'll come to you first. Your top closing strategy.
Well, it's Kotak, HDFC Bank, HDFC, Reliance. I'll go in for Kotak Bank, BTST, Neeraj, 1% stop loss, 2% target.
So you told me all the 4 names because you think all 4 are strong, but Kotak is the strongest.
Yeah, Kotak was my pick at 230 for a positional trade, and it remains the BTST also.
Okay, I get your point. Okay, so BTST on Kotak from Hemen. Ajit, what about you? Your top closing strategy?
Neeraj, I would go with the Biocon, considering the kind of breakout that we have seen in the stock. The range was close to around 280 to 300 for the last 2 months, and it has witnessed the breakout of late. Today it's a day of pause, so it's providing an opportunity to enter. So one can go long at the current levels. It's close to around 310 with 300 as stop loss and 330 as a target.
Okay, I just want to mark some tourism-related stocks. You've got ITDC, which is up significantly. I guess it was locked in upper circuit a while back. You've also got Tourism Finance. Yep, 16% higher right now. Tourism Finance is also up and about. 13 to 14% gains coming in there, and something like Royal Orchid, I guess that one's locked in upper circuit with gains of 20%. Taj GVK has also seen some bit of, Royal Orchid is up, by the way, 20%. Taj GVK is up about 13 to 14%. But let's discuss the bigger pocket, and Tata Steel is one of them. The stock's fallen on account of poor set of numbers. Samir, the street's now saying Q4 will be better because the prices in both Europe and India have moved higher, but European operations were a howler this time around. How do you approach the stock?
So I think even if the prices will go up, the volume pickup is far from anytime soon. It won't come up. If you see, let's say around 15% goes to automotive globally. That demand is almost into the negative territory. So your inventory pile-up is going on at factory levels as well. So whatever output you are doing, at least 20 to 30% is sitting at your factory rather than being out in the market. So that is one of the main constraints coming through the metal industry globally. If I see the cash books, the cash flows have increased a bit quarter on quarter, but again the debt concern is still at large. There's a lot of majority will come in renewal in, let's say, 21 and 22. So that's where the expiry of a lot of large amount of long-term debt comes up. So that refinancing will again put a pressure on the numbers as well. So I feel metal pack has run up quite quite much before the results on the anticipation that a lot of prices will come up, the revival will be very high, the infra story will be played up very soon. So these kind of anticipations were already there in the system, but these are far from being played on the ground.
It's taking a lot of time.
So I think again, I might be wrong and I should be wrong. Again, these places you should get out of the numbers which are, debt burdened.
Yeah, it's been over leveraged for a while.
I think, and even if you get like a 30%, 40% kind of a run up in past couple of months, which almost every metal name in frontline gave you, these becomes more opportunity to trade or exit.
Sure. Since you said trade, I quickly want to get Hemen's call because Hemen, you can correct me if I'm wrong. I think you had chosen Tata Steel among the metal stocks which were looking good on charts. Would you buy in today's correction, or do you foresee more correction even from current levels?
No, I'd buy from you. I'd buy for just 3 trading sessions, but I'd buy from you.
Okay, let's see if the dip gets bought into. Usually post the numbers, that's the trend for Tata Steel. But Samir, thoughts on Hemen, which is corrected quite sharply today?
So I might again go a little negative on it, because if you see escorts, if you see other unlisted players, they're gaining market share. They're doing a lot of spends on dealer expansion. They're doing outreach programs. There's a lot of movement happening on private players and escort level. Private players have the capacity to ramp up and supply to those new dealer networks. And they have been doing it in pre-Rabi season as well. So next Kharif season, there might be a lot of market share change in terms of M&M. And M&M is doing a lot of R&D spend in electric and other operational expenses. So I think as a group, they are good. But in terms of cash flows, M&M and Tech Mahindra was the largest cash flow generating machines for them as a group. And that's where M&M cash flow might be used more towards this electric movement, which is, I think, still too early to be called into a shift of profitability. So I think it's better to take some profits out of M&M rather than looking at it. And maybe escorts work, but even the valuations over there don't work for me. So I rather keep autos totally out of the list for me.
All right, we'll leave it at that, Samir. Thank you very much for joining us. And since we're on the topic of M&M, just today's drop, my producer tells me, is the largest since September 2018. And if it closes at these levels, I think it's going to be the biggest since August 2009, the biggest drop in terms of closing, sharpest drop towards closing since August 2009. So pretty dramatic there, the sell-off there for M&M, 528 on the stock. Some more losses coming into stocks like Bata, which is down about 1%, not major drop, but it's down today. Emphasis at 926, that's down 1% as well. Godrej Properties corrects 1%. LIC Housing Finance is down 2.5%. Spandana Spurti down another 2.7% in this session. Hemen, quickly on LIC Housing Finance?
I would be more time frame specific, but I believe that we are looking at 450 in the next 4 trading sessions, Devina.
Okay, and Ajit, UPL, if somebody is holding long position, would you advise to book profit or carry forward the position?
So Navneet, the kind of rebound that we have witnessed in stock in last 5-6 sessions, I would recommend to book profit at least the current levels and wait for a dip close to around 550, 555 to re-enter.
Okay, gentlemen, stay on. Let's start wrapping up the markets. I must say, big boy Reliance Industries has moved in the green, and that's probably helped the Sensex recover a bit of lost ground. So just about 1/3 of a percent in the red. The Nifty Bank about 136 points, so less than 0.5%. And the mid cap and the small cap indices, which were at the worst possible market breadth at the start of the show, those indices will come up on your screen. I think there is a spot of bother there, and the market breadth is not looking all that great. So they haven't recovered as much as a Reliance led up move on the indexes, Sensexes. But we can live with one day of pain at the broader end of the spectrum. Let's see if this continues. But the large caps, and as I said, Reliance may not feature in the list, actually does, because the gains have been so paltry today. So UPL about 4.5%, Bajaj Finance 1.5%, Kotak, TCS are the other two Actually, just Kotak, which is the third one, which is up about 1%. Look at the rest of the pack in the top 10, barely any move, less than 1% for a TCS, for a Reliance, and the others have hardly moved. But the losses have been large and have stayed throughout the trading day today. M&M may not have been 7% throughout the day, or Z may not have been 7% throughout the day, but they have been in the red territory now for a while throughout the trading day. Tata Steel started off weak and has stayed weak. Grasim has weakness. Coal India, Bharti Infra, Hindalco. Commodities and autos have been clobbered in trade today, and don't quite know when would this pain end, because the world markets aren't looking exactly hunky-dory right now. But the mid caps, for a change today, have had much larger and much stronger pain than the large caps have. Navneet, what's standing out?
Yet still, there were a lot of gainers despite of the underperformance from the broader markets. In fact, my list has a lot of gainers, so let me begin with that. You had Apollo Pipes, which did witness buying interest in the second half of the session, and the gains were quite significant, double-digit gains coming in for something like Apollo Pipes. And then you had stocks, tourism-related stocks, which were moving higher in trade, something like ITDC, Tourism Finance. Both the stocks were up and about, so strong gains coming in the second half of the session for that. There you go on your screen. 17 to 18% gains coming in for something like Apollo Pipes. The other stock should also come up on your screen. I was talking about Taj. GVK also ran up 13%. And remember, majority of these gains were coming in the last 45 minutes of trade. Royal Orchid was the other one. I think it started off positive. The gains built on from thereabouts. And the stock was locked in upper circuit finally with gains of about 20%. And what a run this expensive stock has had. That's D-Mart. QIP announced the floor price was $19.99. Look at the stock. It's at $24.80, up 8%. And despite of higher valuation, looks like Street is still excited even at current levels. Bandhan Bank up for the second straight day. It was up 4% even on Friday. In a weak market, remember, Bandhan Bank has been moving higher. Then you had your chemical companies which were moving up. We spoke to the management of Bodal Chemical. They confirmed that they do benefit out of the production losses which are taking place in China. So 13% higher for Bodal Chemical. And then you had Union Bank, which came out with its numbers just a while back. There was some improvement in asset quality. As a result of that, just post the numbers, you saw the stock also spiking up about 5%. On the losing side, KRChoksey did not have a great session. I think there was a sharp fall seen in the stock, down 11 to 12%, closing at day's low. Motherson Sumi, the numbers disappointed across all parameters, and hence that negative reaction. ACC, you would have said volumes looked better, but sequentially, I guess the realizations were lower, and the street did not like that. 3.5% cuts for ACC. And Just Dial also did not have a great day today. I think there was some selling pressure, and finally the stock's closing with cuts of about 6 to 6.5%. But suffice to say, I think the bulls have defended the 12,000 mark today.
Indeed, and that's probably the only silver lining you take away from a 0.5% cut day, that it did not close below 12,000. So 61 points shaved off the Nifty, 126 odd points. That's also off the lows of the day. We were almost down 200 points for the Nifty Bank, and the Sensex also down 0.5%. But that was already, that was on the back of Reliance Industries contributing, which wasn't the case for the mid caps and small caps. So the contributors will come up next, and as we've already seen Reliance's contribution today, Kotak Mahindra Bank too was in the green. Bajaj Finance as well, adding on to those gains. What lost out was the big 7% drop for Mahindra and Mahindra. Tata Steel 6% drop on this one. L&T also dropped a bit in the session, but obviously, not much in terms of the point contribution. But that's what you've got in terms of the contributors.
Yep, and looking at the broader markets, they definitely underperform. But even if you look at the market breadth for the entire listed universe, we sustained that trend throughout the day. And I think it had been in favor of the declines. Even when we opened, the ratio seems to be 1:2. In a declining market like today's, you had volatility also surging. So India VIX, I guess, crossed the mark of 14. Yep, it's closing with gains about 3%.
And turnover, that's one quick call there. 33,700, so lower than the last entire week's average of 43,000 that we had clocked in. Quick closing comments from our experts then. Hemen, let's come to you first on what is it that you're going to watch out for trade tomorrow.
I think 12,000 has held, Devina, so I would take that as a small positive. I believe we're set for 12,200. Bank Nifty would do the same and move to 31,400. Whole bunch of stocks which suddenly started popping up on the screens at the end of the day. I maintain a positive view on Kotak Bank. I would probably add HDFC Bank, Reliance, and even some of the metal stocks which have been beaten down. So like Navneet said, the weeks is a pause for not too much, but some concern. We should be slightly lower, but 14 is affordable. So I'd say next few days seem to be positive as far as the market is concerned. About 12.3, I don't see too much of sustainability, but that's my view today. So I would be positive than negative in the next two trading sessions.
Okay, more positive than negative. Ajit, is that the same with you?
Certainly, Devina, and the reason is clear that if you'll see the Bank Nifty, the performance, especially if you'll see the last 2 weeks, the Bank Nifty ended the decline of the budget week. So that clearly indicates that the kind of underperformance that we are witnessing from the banking pack, we might not see the same now. So as long as we are holding above, let's say, 30,700 levels, at least in the Bank Nifty, I doubt there'll be any major decline, at least in the index.
Okay, we'll leave it at that. Gentlemen, thank you so very much for joining us this afternoon with your thoughts. And as we end the show, auto sales declined across the board in the month of January. Passenger vehicle sales fell about 6.2%, while the slump in commercial vehicles and two-wheelers was sharper at 14 and 16% respectively. Nishant Sharma caught up with Rajesh Menon, Director General at SIAM, to talk about the pain points and the road ahead for the industry. Listen.
From a slowdown perspective, I think what is worrying more is commercial vehicles and two-wheelers, because they are continually showing signs of sustained negative growth for the last many months. So from that aspect, yes, the recent announcements of the government on infrastructure projects should help. If those projects get on ground quickly, then we'll see some positive momentum and some demand in the commercial vehicle side. And similarly, rural economy related announcements in the budget, if that comes on ground, we'll see better numbers in the two-wheeler side, especially motorcycles. But on the passenger vehicle side, it is still a negative growth. It is -6, as you said, -6%. And if you notice, SUVs have done well, utility vehicles have done well. But it's been lesser negative growth since the festival season. It's been much bigger negative growth earlier. So that way, yes, it's still negative, but lesser negative growth. We are, next few months, I think, are challenging months for us, because we will be making the transition to BS6. So let's see how it goes. But we are hopeful that we will see a quick recovery at the earliest.
Right, and talking about the transition as well, there's been a threat from things getting bad because of what's happening in China, because of the coronavirus outbreak as well. We saw Mahindra talking about how their plans going to be impacted because of that. Are there any concerns from the other OEMs as well with regards to the coronavirus, with regards to supply chain, and also with regards to BS6 transition?
There is some apprehension. There is some apprehension among some of our OEM member companies that their supply chain may get disrupted. But China is supposedly opening up today, post their Chinese New Year holidays. So we will make an assessment. We are in touch with our OEM member companies. We will get some data from them, and then we'll make an assessment of what the impact is and how bad that impact is and who all are getting impacted because of that.
Right. And are you seeing the consumer sentiment also coming back in terms of demand, sort of any sign of revival? Because although you mentioned that the slowdown is lower as compared to last year, but the things are again looking down as if they're going further deeper down into the...
We are hopeful. We are hopeful, especially, I would say, of course, Auto Expo has been a good platform. We have seen a very good response from consumers. We're hopeful that it will help in reviving consumer sentiment to some extent. But some decisions of the government, like a scrappage policy, if that gets announced and if it is incentive based, that will also help revive demand. Though some of the budget announcements can look at demand in the long-term aspect. So we are hopeful, but yes, in the next few months it will be challenging months for us.
Right. And what more things government can do at this point in time besides scrappage policy that could also spur demand?
So we have, of course, been seeking couple of recommendations from our side, which will help revive demand. One, of course, was scrappage policy, which is incentive based, which will help revive demand. The second, what we have requested is to look at GST and reduce the GST from 28% to 18%, because we're not really a penal good in that sense. 28% is a penal rate. And third, we have said is that if a program can be announced by government where all the state transport undertakings can be provided with appropriate budgetary allocations, so that can all procure buses that will help in reviving demand in the commercial vehicle side. So these are 3 or 4 of our suggestions. We will continue to engage with the government and see what best can be done.
Right, and are you seeing pre-buying happening now in the run-up to the BS6 transition? Where are discounting? How do you see that playing out?
See, there could be pre-buy in the commercial vehicle segment. The numbers still don't reflect in that sense as of now, but yes, there could be some pre-buy in the commercial vehicle segment.
Lastly, what gives you optimism that the worst is over sort of and there'll be a revival around the corner?
I won't say there's a revival around the corner. Revival probably will happen later part of the year, in maybe this second half of the next financial year. But we're hopeful that we'll see better sentiment going forward. We're hopeful that there will be a little bit revival in demand to some extent, and slowly things will start changing. April 1st is a transition time. There will be a bit of a price increase, so we'll have to see how that will impact demand.
But we expect 2020 to be still better than, to some extent, 2019 now?
Probably yes. But no, but October, as I said, October onwards, the next festival season onwards, we are hopeful that it will be much better.
So the hope again hinges on the festive season, the way we saw a lot of things were relying on.
I think that's the next second half of next year. By that time, the BS6 products would have settled in. People would have got adjusted to the new price increases. We would have seen how the market responds to that. So there'll be new products online. Auto experts, so we saw many launches, many unveilings. So I think it'll be a combination of many things, many incidents and many events which will probably lead to that.
But is financing still a concern?
No, financing has been very much addressed by the government's actions. So the inventory financing has also been taken care of, and also so I think financing has been addressed to a large extent by government's actions.